I welcome all the viewers to this channel. So today class topic is partnership form. All are requested to watch till the end of to get a good understanding on the topic. Do not escape from the middle of the class. Must watch till the end. Very important and necessary points that I am going to cover in this class. Class topic of the partnership form. So these chapters we are going to learn under the subject accountancy. From accounting point of view, this topic is I am discussing here. That is a partnership form where two or more persons join to do a business for earning profit and sharing of profit or losses of the business. That is the partnership form, which is started purely on profit motive, earning of income. As you know that there are different form of business organization. Among them, most popular businesses are sole proprietorship business, thereafter partnership business, and thereafter company form of business. So these businesses are very popular. In the sole proprietorship business, one main business which is one person control, supervise, and manage all the business activities. And because of having limited resources, capital, and supervision control of a single person is also limited. So the next form of business is partnership. To overcome all these limitation of sole proprietorship business, partnership form of business is popular to a greater extent compared to sole proprietorship business. As this partnership form, I told you that we are learning the chapter from accounting point of view. Recording of business transaction in journal, preparation of various accounts in the ledger like partners capital account, loan account, and preparation of final account like that is the trading account, profit and loss account, and balance sheets of form, revaluation account, realization account, valuation of goodwill pertaining to partnership forms. A partnership form is an association of two or more persons which is formed voluntarily, jointly carried on business with the profit motive and share profit and losses in their predetermined profit sharing ratio which are resulted by an agreement. So a partnership form which comes into existence through an agreement. The relation of partnership arises from contract. It is necessary that all the elements of a valid contract must be present in the partnership. The persons entering into partnership must be competent to contract. They must be of sound mind. The object of partnership must be lawful. Therefore, a partnership business is based on agreement. The agreement of partnership may be expressed or implied, that is written or oral. So it is originated from mutual agreement among partners. So the meaning and the definitions and the features of partnership form that I am going to discuss again here. Here the meaning given. A partnership is an association of two or more persons to carry on as co-owners. They held the assets and liabilities jointly and share its profit and losses. Each partner acts both as an agent and principal of the firm. So in partnership, the relationship of principal and agent exists. Each partner is an agent of the firm and his activities bind the firm. He also acts as a principal because he is bound by the activities of other partner. If a partner purchases goods on credit for partnership, this act he has performed as an agent and a partnership firm liable to pay the amount to the supplier. That is, his act binds the firm. Similarly, if other partners have taken loan for business and if partnership firm has not sufficient assets to pay the loan amount, then partner will bring the personal assets to pay the amount of loan. At this moment, partners are acting as a principal. So this is the meaning given about the partnership form. Then the definition is given by Section 4 of the Indian Partnership Act 1932. So this is the Partnership Act 1932. So what is the Partnership Act? It is 1932. Rules, regulations regarding the formations of partnership form. The partnership business shall be carried on as per the Partnership Act 1932. It has defined partnership as the relation between persons who have agreed to share the profits of a business carried on by all or any one of them acting for all. Partners in a partnership business, more than two persons who join the business and they actively participate in the business activities for conducting the business smoothly. They take part in the management of the business. Partners who take part in the conduct of the business, and sometimes one person here one partner business carried on by all. So all these activities of the business, managerial activities of a business carried on by all or any one of them acting for all. Sometimes all the partners actively participate in the management of the business, or sometimes only one partner actively participate in the management of business. And it is given that the minimum two persons are required to form a business. But the Partnership Act 1932 has not given the maximum number of persons for partnership form, and it is given by the Companies Act 2013, in which it is mentioned that the maximum number of partners in the partnership business is 50 as per section 464 of the Companies Act 2013. So Companies Act has defined the illegal association. If the number of partners exceeding 50, then it becomes an illegal association, and accordingly the partnership form must be converted into the company form of business. When we analyze the partnership form, that the partnership form possesses the following features, characteristics of partnership, which are as under here. Number one, plurality of person, means more than one. Here it is given a partnership form is set up by more than one person, 2, 3, 4, 5, but not more than 50%. That is the maximum number of person is 50. The next essential features of partnership, business existence of a business. Partnership can only be for business purpose. An association of person for charitable purpose or religious purpose cannot be termed as partnership business. It must come into existence for earning of profit. It must not be confined to paperwork, and it should not be fake. It must undertake business activities of production, distributions, or providing services for profit earning. It is not to be formed for namesake, and it must be legal form of a business. The business which must be permissible and lawful business. It must be legal form of business, that is the business activities undertaken by partnership form must be lawful. It should not be illegal business, because the partnership come into existence with a profit motive, earning of profit. And charitable institutions, their primary motive is social welfare, not the earning of profit. Here it is given profit motive and a sharing of profit. Partnership agreement is with a motive to earn profit and then distribute it among different partners in an agreed profit sharing ratio. This agreement applies to losses also. So if there is a profit, they share the profit. If there is a loss, they also share the loss in their profit sharing ratio. Unlimited liability. Liability of all partners is unlimited. Implies that partners may need to bring further capital if need arise. If a business suffers losses continuously to pay the debt of the firm, if it has not sufficient assets balance, therefore partners run the business with unlimited liability feature. If the assets of the partnership are insufficient to pay its liability, then the private properties of partners can be used to repay them. Private property of partners, and if the assets of the firm is not sufficient, then to pay the creditors of the partnership firm, then the personal property of the partners shall be attached or shall be used to pay the creditors of the partnership firm, and that is why it is called unlimited liability. The next feature of the partnership firm is here taken: restriction on transfer of share. After becoming a partner, it is his/her right to get share of profit. This right he cannot transfer to other person without the consent of all the partners. Generally arise when a partner retire from the business or when a partner leave the business on the death of the partner, then he cannot share. If partners A leave or after the death of partner, say for example A, then his son cannot be a partner. Without the consent, no partner can transfer his share in the partnership to any person without the consent of all partners. So consent of existing partners is required for transfer of his share. In a normal case, a partner is not entitled to transfer his share of profit to other person without the consent of all the partners. So these are the basic features. Sometimes you may get one question of 2 marks. State any 2 features of partnership form. State any 3 features of partnership form. Then from these features or characteristic, you can answer. Well, viewers, so this is what a theoretical discussions about the partnership form. So meaning, definitions and features of partnership form. In my upcoming classes, I will show you step by step the solving of various problem in partnership form. So all of you keep watching, like, share and subscribe. Thank you very much. Jai Hind.